Hey everyone, welcome back. So I hope you guys are having a great day. Today was a little chaotic in the morning with Hive suspending trading or halting trading on was it on the TSXV in the beginning and then eventually on the Nasdaq here. So why don't we look at that here really quick here, and then I got some questions for you guys from the story that was obviously press release that was done today, and some other questions. So hopefully you guys can help me understand this. So let's get into the story here. So let's take a look at the chart here. So this is Hive Blockchain now. It was obviously down 8.64% on the day. It started out the day looking really good. We were up to almost 560 on the Nasdaq here in the morning. We had a nice good pump. We were up almost 14% on the day. And then obviously the story came out that HUT, the IIROC trading halt on Hive. So company Hive Blockchain Technologies, TSX Venture symbol Hive. All issues yes. Reason at the request of the company pending news. So halt time was 8:55 a.m. So Hive halted trading on it. Then we got the news story here at around, what was this, 10:12 a.m. I think this was, I don't know if this was Eastern time or Central. I'm guessing this was probably Eastern time. But we can see here on the chart here that between 10:42 a.m. and 11:44 a.m. there was a halt in price in trading. So let's take a look at the story here really quick. And I got some questions to ask you guys as well on this. So interesting part was not for distribution to the United States, newswire service, or for dissemination in the United States. Obviously we still got this anyways. So Hive is pleased to announce that it has entered into an agreement with Stifel GMP as lead underwriters and sole book runner to include a syndicate of underwriters, the underwriters, whereby the underwriters will purchase on a bought deal basis 16.67 million special warrants of the company, the special warrants, at a price of $6 per special warrant for aggregate gross proceeds to the company of $100,020,000, the offering. So I believe this is going to be all in Canadian dollars, not US dollars. The completion of the offering will be subject to the receipt of all necessary regulatory and corporate approvals or consents. And then they go into the details here a little bit. Here's the part that's gotten me kind of confused. Maybe you guys can help me out with this. So each special warrant shall entitle the holder thereof to receive, subject to adjustment in certain circumstances and the penalty provision as defined below, and without payment of additional consideration, 1 unit of the company, each a unit, upon the exercise or deemed exercise of special warrant. So here's the interesting part here. So each unit shall consist of 1 common share of the company. So the warrant, the special warrant that they're getting 16.67 million of those. Each unit shall consist of 1 common share, so they're getting a common share of the company, and 1/2 of 1 common share purchase warrant. So basically, are they getting 1 common share of the company stock and then another 1/2 of common share purchase warrant? So it's kind of like they're getting 1.5 for the price of 1, right? That's at least the way I'm reading it. So I'm no securities exchange expert or anything, so this is kind of the way I'm just reading it. So I'm hoping you guys can correct me on this if I'm wrong. So, and 1.5 of 1 common purchase warrant, each whole common share purchase warrant, a warrant. Each warrant will entitle the holder, therefore, to purchase 1 common share of the company, a warrant share, at a price of $6 per warrant share for a period of 36 months following the closing of the offering. Okay, so the way that I understood this was the underwriters are getting basically 16.67 million shares of the company at $6 Canadian. When they exercise that, they're getting basically 1 common share of it and another 1/2 a common share warrant, purchase warrant, and 1/2 of 1 common share purchase warrant. So it's like they're getting another 8 million of those special purchase warrants, which they can then, after the close on this deal, have 36 months to buy those, to use those special share warrants to buy the company stock again at $6. So if the price goes up to $12, they're making 100% on that 8 million of special warrants. So they're going to be making possibly So let's just say it's a $6 profit, 8 million. You're looking at, what is that, 48 million Canadian dollars on that, on top of the 6 million that they're getting for just doing this deal. That seems like a really sweet deal for me. I wish everyone could get that kind of deal. If this is actually what I'm thinking is the case. So as I'm saying, if you guys know this, let me know if I'm wrong on this, or if I am right. But if I am right, that's a sweet deal. Let's take a look here. The special warrants will be exercisable by the holders thereof at any time after the closing date for no additional consideration. All unexercised special warrants shall be deemed exercised on behalf of and without any required action on part of the holders, including payment of additional consideration on the earlier of, and then it goes into all these details here. And then here's the part that it actually gets into as far as what they're going to be using it. So the company anticipates the net proceeds of the offering to be used for a program of data center development and minor ASIC acquisition to increase hash rate by 1 exahash per second, working capital requirements, and other general corporate purposes. In consideration for their services, the underwriters will receive a cash commission equal to 6% of the gross proceeds of the offering. So 100 million in Canadian, they're getting $6 million just for providing their services. The securities described herein have not been, and this is the other question I have for you guys. So I'm guessing that this is going to be on the TSXV shares only and not the US NASDAQ shares. So the dilution is happening in the Canadian ones, at least that's what I'm thinking, and here's why. Like I said, I'm no securities expert, so correct me if I'm wrong on this. The securities described herein have not been and will not be registered under the United States Securities Act of 1933, as amended the U.S. Securities Act, or any state securities laws, and accordingly may not be offered or sold within the United States except in compliance with the registration requirements of the United States Securities Act and applicable state securities requirements or pursuant to exemption therefrom. This press release does not constitute an offer to sell or a solicitation to buy any securities in any jurisdiction. So based on that, I'm getting at least, from reading this, I'm getting the feeling that this is only going to happen in Canada, where that possible dilution is going to happen on the TSXV. But correct me if I'm wrong on this. This is just the way I'm reading it. And obviously I'd like to know if I'm right or wrong on that. But here's a couple other things that have kind of piqued my interest here a little bit. So after reading this and thinking about it a little bit, I had some questions I wanted to ask, especially pertaining to Hive. Number one, instead of doing things like this where they're diluting shareholder value and everything like that, why don't they just, they're hodling a lot of Bitcoin and Ethereum, why not just put that into stake or someplace where you can actually get interest on it, right? So on Bitcoin, Ethereum, put it in that, you get it for 8, I don't know what it's going to be, like 10% or something like that. Put that in that and make money off of that way. The second thing is, why not take that out a loan on the Bitcoin holdings and the Ethereum holdings that you have as collateral? So take out 50%, 75%, whatever you can take against that. Use that money to build out, and then pay down the loan interest with proceeds from the staked coins that you're making the interest on. That would seem to me like a better deal, and it wouldn't dilute shareholder value as much. It's kind of like, I think Hut 8 is doing the same thing, where they're staking their coins and they're getting interest yield on it for doing so. But yeah, that's just what I had to talk to you guys about, ask you guys about, as far as if you know any other news on this, or if you have, my thinking on this is wrong, please do correct me. I'm no securities expert, like I said before. Just a YouTuber learning this as I go along as well with you guys. I do have some experience, obviously, mining Bitcoin and Ethereum and other things like that, but this is beyond my expertise here when it comes to these kind of securities laws and everything else like that. So that's all I got for you guys. Obviously, it's not bad, but it's not the greatest thing either. I think they could have gone about it a different way, obviously, by asking these questions. Why not stake your coins, get a yield on them, get a loan out against your HODL position, and then use those proceeds to grow your business a little bit. Because after all, what's going to happen later on? Let's say Bitcoin does go up to 200,000, 250,000. Are they actually going to sell those Bitcoins? Or are they going to still HODL them when the Bitcoin price goes down? So you got the coins. You might as well put them to good use, at least in my thinking is. Use your coins for good, get a loan out against them, grow the company that way, and then dilute less of your shareholder equity that way. But that's just my 2 cents for what it's worth. guys. All right, that's it. That's all I have for you guys. Thank you so much for watching. Until next one, have a great day. Until then, bye.